I've been trading for the last 7 years and I've tried hundreds of different entry models. It took me years to perfect my entry and learn how to enter a trade the right way. In today's video, I'm going to share with you my favorite entry model that is repeatable, mechanical, and systematic that I use on a daily basis. I'm going to share with you the pros and cons of each entry model along with the exact criteria to take the guesswork out of your trading. And with that being said, let's not waste any time and let's get straight into the video. So in today's video, what we're going to talk about is entries and why entries are very important when placing trades in the markets. As you can see right here, what we have is a clear uptrend, higher highs, higher lows, and we're pushing towards the upside. And in this case, the area where we want to place trades is this previous level of resistance to turn into support. So we like to see this area be used as support for continuation back towards the upside. And this is the exact ideal area on where we want to be placing trades. And just because price comes back down into this area doesn't mean we're just gonna blindly buy. There's a few select things that we need to look for in order to place our trades. We want to be looking for specific entry confirmations. We want to see if there's any buyers stepping in, because if we do not react to price at these certain areas, we can easily lose when we could have avoided the trade altogether. So as you can see, we have our first scenario played out where price ends up pushing towards the upside. You can see it comes back down into our retest level. Price slices through our key level of support, breaks it, and reverses all the way back towards the downside, and we end up taking a loss on this trade. Of course, looking in hindsight, we can see that there was no buyers that stepped in off this area, but during real time, maybe there was buyers stepping in off that level, but ultimately end up closing bearish and we end up getting faked out. The number two scenario, as you can see right here, is when buyers step in very nicely. You can see we end up closing strong, and then the next candle we end up having our confirmation and price ends up pushing towards high of day and above. The difference between these two setups, even though they're exactly the same, one has buyers that step in and has continuation towards the upside, and another one does not have buyers and we end up failing and continuing lower. And the main thing to identify if a trade is ultimately going to be a winning trade or a losing trade is the reaction that we have off these key areas in price. Is the buyers going to step in and are we going to push back towards the upside, or are there going to be no buyers that step in and ultimately it ends up being a fake out back towards the lows? And that is the purpose of today's video, and I'm going to show you one powerful entry model that I like to use on a day-to-day basis in order to identify high probability trades, or if the trade is ultimately going to fail, and signs that we can use to potentially avoid losing trades pointlessly. So now let's go on to my favorite entry model that I look for. So as you can see right here, what we have is the 3-bar pattern, and the 3-bar pattern is a very potent and effective entry model that we can use in combination with our trading strategies. You might have seen me talk about this before on my channel, but I'm going to talk about specific criterias along with the different types of time frames that we can use to combine it together to make it a lot more powerful. So as you can see, what we have on our left hand side is what's called the bullish entry model, and the bullish entry model consists of 3 candles, same as the bearish entry model. So what we have here is our first candle. So let's say, for example, this is bullish, so price is coming up, breaks above a key level of resistance, and now we're looking for this pullback down in towards our key level of support. So let's say, for example, this is our previous day highs. So price, as you can see, is pulling back down in towards our previous day highs. What do we want to be looking for? So number one, the first candle is what's called our lead candle. This is the candle that pushes price down in towards our key level of support. Number two, the second candle is what's called our reaction candle. This is the candle that we want to see if buyers are going to be stepping in. If we have a lower wick, that's a good indication that buyers are present. If we close above our key level of support, that's another good indication that buyers are present. There's some specific things that we should be looking for, and that's primarily based off of reading the tape. I'll show you some examples here, of course, in a second. And the third candle is one of the most important candles, which is called the confirmation candle. This is the candle that ultimately decides if we're going to fail and most likely break this key level of support, or if we're going to end up closing strong and pushing back towards high of day and above. So as you can see, the first candle can form in many different ways. Some things to look for is the size of the candle, how much volume is there coming into that key level of course, support. The second candle, the color of the candle does not matter as much compared to the reaction that we have off of our key level. If the second candle fails, of course, there's going to be no setup. If the second candle, let's say buyers try and close below, but you can see the buyers are stepping in and we're closing back above. That's a good indication that buyers are present. So let's say the second candle ends up closing. And the third candle is what's the most important candle. So let's say our third candle opens up at the low. We push all the way towards the upside. It's looking very bullish, but then all of a sudden it ends up pushing all the way back towards the downside and closes underneath our key level and ultimately ends up flipping red. This is not a good sign that price wants to continue higher, because ultimately you can see we have a large upper wick end up closing underneath our key level support. In this case, there's going to be no trading opportunity since there's no confirmation that price wanted to push back towards the upside. But let's say, for example, right off the bat, price pushes lower and then ends up pushing all the way back towards the upside and ends up closing green. Now this is a lot different of a scenario. For me, this looks a lot more bullish because price is now closing above our previous candle high. This gives me a good indication that price wants to push back up and towards our high of day and above. If price closes above our first candle, even better. This is giving me extra confirmation that it wants to have a strong bounce and continuation towards the upside. So as I mentioned, our third candle is very important, and depending on how we close, if we close above the second candle, it's bullish. If we close above our first candle, even more bullish. Of course, if we close below, then that is going to be bearish. And this is on the candle closure. I'll also talk about a few scenarios on when you can get in as the candle is forming, but for now, this is the basics of the bullish entry model. And the exact same thing applies to the downside. In this case, price is heading lower. We come back up into our key level of resistance. So for example, this is now going to be your previous day high, or it can be your previous day lows. So this is a key level of resistance. Our first candle, of course, is our lead candle. Second candle is our reaction candle to see if sellers are going to step in. And then our third candle here is the confirmation to see if price is ultimately going to push down in towards low of day and below, or if it's going to close bullish and end up having a reversal. So the first candle, right, we like to see push towards the upside into our key level of resistance. The smaller the candle and lower the volume, the better. Our second candle, of course, is our reaction candle. So we want to see if price pushes above to see if sellers are going to be stepping in off this key area. If sellers step in, price closes underneath, that's a good sign. And of course, our third candle is what's important. And there's a key distinction here on a potential more aggressive entry model, which I'll talk about. But for the downside, similar thing. If price closes bullish, then of course there's going to be no trade. If this ends up closing green, this is a good sign of the price being invalidated and it's most likely going to continue higher. Let's say if price pushes higher, but ultimately sellers step in and we start showing any sort of bearish price action, this is a good indication that price is going to continue down towards low of day and below. And for the exact entries that we can be looking for, let's say price closes underneath our second candle. This is a good indication that price is going to continue lower. If price closes below our first candle, of course, this is very bearish and we're most likely going to continue lower here as well. And the one thing I want to mention about the downside is sometimes you have to be a little bit more aggressive. And this is where the distinction between upside and downside comes in. What I always like to say is whenever we're moving towards upside, we're stair stepping our way higher. When we're talking about downside, usually it's elevator down. So stair step up, elevator down. If we understand this, that usually means the downside is a lot more aggressive. So sometimes you have to be a lot more aggressive in our entry models when looking for the downside. A lot of times, as soon as you show bearish price action and we break underneath this candle low, that's when sellers step in. And a lot of times the candle actually closes below our first candle low. So instead of chasing price all the way down at our candle close, what we can be looking for as soon as price breaks underneath our previous low, this is where we can go looking short with a stop loss just to break above, and we could be looking for continuation towards the downside. So as this candle is forming, as soon as we show bearish price action breaks underneath our previous candle low, that is when we can be looking to take our entry in short with a stop loss just to break above, looking for low of day plus continuation below. Majority of the times, this candle will close weak and end up having, of course, continuation lower, and price ends up moving down in towards our take profit levels. So as you can see right here, these are our two entry models that we use towards the upside and the downside. Of course, this 3-bar pattern is one of my personal favorites. So with that being said, now I'm going to hop into the charts to show you guys exactly what this will look like in the real markets. So as you can see right here, we're on my first example, and right here we have the SPY chart pulled up. What we're going to do is mark out our previous day highs. We're also going to mark out our previous day lows. What we can be looking for coming to market open, longs above our previous day highs are now the potential reversal back down in towards our previous day lows. So now let's mark out key levels and go on to the lower time frames. So as you can see right here, within the first 5 minutes, we're getting this super nice push towards the downside here on SPY. The levels that we can have marked out in this case is going to be that 5 minute range low. We can also mark out this up close candle here as well. So now what we like to see is this level reject for this continued push towards the downside. So as you can see, price came up in towards our 5 minute range low plus this order block here as well, rejected off this area. And now we're having this nice confirmation that price wants to indeed head lower towards the downside. So let's kind of examine exactly what this 3-bar entry model can look like. So as you can see right here, this is what's called our lead candle. Price pushes up in towards our key area. We have our second candle, which is the reaction candle. You can see that sellers stepped in nicely off the high. And now what we have is our third candle, which is our confirmation. So as you can see right here, price pushes up in towards our key area, rejects off this area. The third candle confirms price that it does want to indeed head lower. We can look for an entry as price closes underneath our second candle low, or now we could be looking for an entry as the candle closes. But this is our 3-bar entry model. As you can see right here, this is where we can go look in short. Let's say we have the entry at the candle close. Stop loss is going to be a break above the second candle high. And now what we can look to target is a fixed risk to reward ratio, or we can go into the higher time frames and now look for, in this case, our higher time frame key targets, which happens to be our previous day low. So we can look for a previous day low, drag this down, and now we can play out the tape. And as you can see right there, SPY ended up having that nice push down in towards that previous day lows. And you can see that was a great example of how to use that 3-bar entry confirmation. As I mentioned, you could be looking for an aggressive entry, which is the break of the second candle, or you can wait for the candle to close to really confirm that price does want to indeed head lower towards the downside. With that being said, let's go on to the next example that I have for us today. So as you can see, we're on my next example here, which is on AMD. Coming to market open, the key levels that we're going to have marked out here is going to be our previous day highs. What we like to see is the break above for continuation towards the upside, or the rejection for this push back towards the lows. Now let's mark out this key level, and now we can go on to the lower time frames. So as you can see right here, within the first 10 minutes of market open, we're pushing towards the upside here now. We are above our previous day highs. So I'm personally going to be using our previous day highs key area for a potential retest for continuation towards the upside. So as you can see right here on AMD, price now pushes down in towards our previous day highs key area. And now we get that confirmation candle that it does want to indeed head back towards the upside. And this is where we can go looking long. So as you can see right here, what we technically have is 4 candles, but the same thesis still applies. So as you can see right here, what we have is our first candle, which is our lead candle. We have our second candle, which is our reaction candle. Our third candle in this case was fairly neutral. But as you can see, the candle right after, which happens to be our fourth candle, which ends up closing above our first candle high, above our second candle high, and our third candle high. So this is our confirmation candle that price does want to indeed move back towards upside. This is where we can go look long with a stop loss just a break below. And now we can be looking for continuation back towards the highs. Now we can play out the tape. And as you can see right there, once price had that confirmation candle, we ended up moving nicely back up and towards our take profit key areas for another solid win on the day. And with that being said, let's go on to the next example that I have for us today. So as you can see right here, currently we're on Tesla. We're on the 15-minute time frame. As you can see, we're ranging in between our previous day highs along with our previous day lows. What we can do here is mark out our 15-minute opening range or our 5-minute opening range, look for a break below for continuation lower, or a break above for that push back up and towards our previous day highs. Now we can mark out levels and play out the tape. We can now mark out our 15-minute range high along with our 15-minute range low. As you can see here currently, now we're breaking underneath on the 15-minute time frame. So we can go back onto the 5-minute time frame here, breaking towards the downside here as well. So now what we would be looking for is the push back up and towards our 5-minute range low for that push down in towards our previous day lows. As you can see right here, price pushes up in towards that opening range low. We have another little reaction here as well. And as you can see, price ended up having a nice confirmation candle towards the downside. In this case, we can actually go on to the lower time frames here onto the 1 minute. As you can see, once we go on to the 1 minute time frame, which we're going to be using for primarily our entries. But as you can see right here, there's a bunch of different trading opportunities and so many different types of 3-bar patterns that we can see. So as you can see right here, once we had that nice reversal, you can see lead candle, we had a reaction candle and we had that confirmation candle that price wanted to push towards the downside. You have a couple other reactions off our 5-minute opening range low here as well. I ended up personally getting in on this candle right here, which was the reclaim back underneath. There's also more entries here as well, which were more based off the 5-minute time frame. But as you can see right here on Tesla, there were a bunch of different 3-bar patterns that we could have used to capitalize this move towards the downside. And especially when we're trading towards the downside, I personally like to be a little bit more aggressive and not wait for the candle to close. So a lot of times once we do break below that second candle low, we'll end up getting that nice continued push towards the downside. Whereas towards the upside, I'll personally wait for that confirmation just because sometimes there can be a lot more fake outs. So with this being said, now I'm going to go on to the live session that I had, which was our first example that I showed you guys to show you guys exactly what an aggressive entry looks like towards the downside in the markets.
The major indices for the SPY, the key level here going to be our previous day highs. If we can maintain above previous day highs, after hours highs and potentially all-time highs are in play. For upside, if we break underneath our previous day highs, we can see this potential mean reversion.
So as you can see right there on SPY, just quickly go over, longs are in play above our previous day highs, shorts are in play for a pushback towards the downside.
Okay, so far we are rejecting here off our previous day highs. Next level that I do have on the SPY cues is actually all the way back down in towards that previous day lows. So let's mark out that 5-minute range low here on most names. And we can keep an eye on your 5-minute range low. If the markets do want to continue lower, we need to see now SPY and cues. We can look for that 5-minute range low for that continuation down in towards our previous day lows here.
So as you can see, what I mentioned here on the overall markets, first 5 minutes, nice push towards the downside. Next levels that we do have here is our previous day lows. So what we can mark out is our 5-minute range lows and our up close candles on most names. And you can now be looking for this trade back down in towards that previous day lows. As you can see right here on the SPY, price is now breaking underneath our 5-minute range low. We're coming back for the retest. So as you can see right here, what we have here is our first candle, which is our lead candle. Our second candle, we like to see if sellers are stepping in. You can see so far sellers are stepping in off this key level. Now what we're going to be looking for here is our third candle. If our third candle can show any weakness, break underneath, we can be looking to take a very aggressive entry for continuation, or we can wait for that confirmation candle that price does want to indeed head lower. So as you can see right here on SPY, we end up having that nice 3-bar confirmation. As you can see right here, entry could have been a break underneath, or you could have been waiting for the candle close underneath. The difference is if you wait for the candle to close, your risk is just going to be a little bit higher. As for NVIDIA, similar thesis here. You have our lead candle, reaction candle, third candle, which is our confirmation. You can be looking for entries, stop above, and now looking for this continued pushback towards the downside. But yeah, as you can see right there on SPY, nice rejection right off our key levels, continuation towards the downside. NVIDIA, another solid rejection here as well, and nice continuation right down in towards our key levels. As I speed up the tape here, you can see for NVIDIA, there's a bunch of different potential re-entries on NVIDIA, on Qs, on SPY, using this 3-bar entry confirmation. You can see for the Qs, another 3-bar entry confirmation here, another 3-bar confirmation entry earlier in the day. As for SPY, right, just rejecting off our up close candle here as well. NVIDIA, we actually end up having a 5-minute 3-bar entry confirmation. I personally entered in on the 5-minute 3-bar entry confirmation using a 1-minute confirmation entry. And as you can see, this is actually where I personally entered, stop a break above, looking for continuation towards the downside. And of course, if I do speed up the tape here, you can see ultimately we end up having a really solid push towards the downside. Another one here on SPY, Qs, and of course on NVIDIA, perfect drop towards the downside, right down in towards our key levels. So with that being said, I hope you guys did enjoy the video. If you did find some value, appreciate it if you guys drop a like and sub. And with that being said, I'll see you guys next week for a brand new video. Peace.